One of the things that you do at Carlyle is focus on particular sectors. You have identified industries or sectors of the economy that you're especially interested in. I want to ask you about some of them and why you find them so appealing. The biggest one, as far as I can tell, is energy. How come?
We think it's a business that's going to be a dominant business in the world for quite some time, because I don't think we're going to avoid the use of carbon probably in our lifetimes in a significant way. But renewable is coming along. Now, ironically, you have a situation where when energy prices go up, that's actually good for renewable, because now it makes it commercially viable to do renewable energy. But still, given where we are and given the efficiency of oil and carbon-related products, that will still be the dominant form of energy for at least my lifetime.
Right. The next largest sector, I think, is real estate. What's the bet there? What's the thinking behind that?
Real estate is, of course, one of the oldest businesses to invest in. It's a traditional business, and it doesn't have the upside of private equity. The returns won't be as good, but the downside is generally more protected. And so for people who are looking for returns that aren't going to be 25% a year, but maybe slightly lower, but really like some current income, which real estate often offers, it's a very good play. And so we do have a large business in real estate in the United States, in Asia, and in Europe.
Right. Is there a big commercial real estate problem yet to play out in the United States?
I do think that that is probably the last shoe to drop of the recession that we went through. We haven't completely gone through a recession in commercial real estate. So I think it is likely that prices in a lot of large cities for office buildings will go down. And I think people recognize that. I don't think it will be as precipitous a drop as probably occurred in Europe, commercial real estate, or as precipitous a drop as occurred in residential real estate in the United States, but there will be a drop.
Yeah. Another sector that you focus on, much in the news these days, is autos. Is this primarily a global bet? Because it would seem that the U.S. market has contracted and is going to remain contracted for a little while.
Well, the U.S. market contracted because we were in a deep recession, the deepest recession since the Great Depression. But now it appears that automobile sales are picking up. But automobile sales are picking up around the world, and really now the biggest market for automobiles is China. And as China grows and its economy keeps growing, more and more cars will be sold there, and they will be by far the biggest market for automobiles. So I think the automobile will be with us for quite some time. Maybe there will be something that isn't dependent on the internal combustion engine, electric cars. But for the foreseeable future, cars are still going to be an important part of our global economy, and I think it's a good area in which to invest at the right price.
Another focus sector, also much in the news, is healthcare. A lot of investors think healthcare is very risky because of what might happen, and who knows what it will be, what might happen with healthcare reform in the U.S. How do you see it?
When I was in the White House about 30 years ago, the expenditure of our GDP in healthcare was about 6 to 8%. It's now about 18%. And as the baby boomers like me are retiring and getting ready to retire, they will spend whatever it takes, and they're the wealthiest generation in our country, to make themselves live an enjoyable life in their retirement years. So artificial hips, artificial knees, plastic surgery, assisted living, whatever it takes to make them feel happier about their life, they're going to expend that money, and they can afford to do it. So you're going to see more and more of our GDP going into healthcare. And I think if any kind of healthcare legislation passes the Congress, that will just exacerbate the situation.
Just another couple of these sectors, because they are much in the news. Another one is telecom and media. Lots going on there globally, but of course the media, is it more telecom? I mean, the media business is being turned inside out.
Telecom hasn't been a wonderful investment for the last couple of years. Now I think as the new media takes off and different types of forms of communication occur, there will be good opportunities, probably in younger companies or emerging growth companies, not in large companies. And probably more even outside the United States than in the United States, because a lot of these technologies tend to get adopted more frequently and more quickly outside the United States.
Right. You mentioned the role of the consumer in the U.S. economy. Much depends on whether the U.S. consumer is healthy economically. What's your reading?
Well, the U.S. consumer has been hurt, of course, because many of the U.S. consumers had 401k programs that are now called 201k programs because they're worth half of what they probably were at the peak. But in addition, the American consumer now spends such a large percentage of its income that probably more savings would be advantageous. Now, right before the bubble burst, the net savings rate in the United States was essentially zero. It's now closer to 5%, which is probably a good thing. So consumer spending won't be accelerating at quite the rate that it maybe does after many recessions. On the other hand, consumer companies and retail companies got hit more harshly than anything else in the recession other than financial service companies. Right. And so the rebound is more likely to occur pretty rapidly as these companies now come back and see some sales occurring from consumers who now feel they can spend something.
Right, right. Well, and you mentioned financial services as the worst hit. It is another area where Carlyle invests. Is this a case where things got beaten down so badly that there are bargains to be found, or is it something else completely?
Well, I hope so. There's no doubt that financial service companies were harshly beat down in terms of their values by some mistakes they made and the concern of investors that this was not an attractive area or government was going to impose undue regulations. Right. So many of these assets are now available at very, very low prices, right. And we've begun to make a significant amount of investments in them, as other private equity firms have as well.